Okay, so this is the US dollar index versus S&P 500. So first of all, why did I look at the US dollar index? I mean, the US dollar index is basically the US dollar. So it's just comparing with a basket of the other currency. So in general, euro just contribute quite a lot. But if you like to take a look, you probably can look at the dollar index. I think the ticker symbol should be DXY. So that's the dollar index. Otherwise, you can just look at the euro dollar. I think that will give you some form of the hint as well. And there are two ways to look at the forex market. So for the past, I think the conventional wisdom is look at the risk on and risk off. So for risk on, for the past, we generally look at Aussie, New Z, and also the Canadian. But for risk on, definitely the focus is on these two pair, Aussie and New Z. But later, somehow US dollar also become an instrument because of the changing of the market dynamic. So when I say that the relationship between US dollar index and the broad market index is it doesn't really stay constant. So that is a very important point. So because a lot of people always have a misunderstanding like the relationship will be there forever, it's the same forever. It is not, it doesn't work this way because for some time, Aussie, and especially if we pair it with yen, Aussie yen is definitely a risk on or risk off instrument because of the discrepancy of the interest rate. Usually, Aussie is contain quite a high interest, while yen is probably zero or even negative. So it's like a lot of people would like to do the carry trades to earn the interest. They long the Aussie yen and they collect the interest. And also, especially for the risk-on scenario, that's where a lot of the money flood to the equity, going to buy the stocks. Then we'll generally see this Aussie yen. But for the past 3 years, you can see that actually for the past maybe from 2017, maybe 4 or 5 years, I do notice that there is a relationship happening between the US dollar and also the S&P 500. So let's take a look here. So first of all, if you recall or if you have been trading in the market since 2017, you probably notice or remember that is a super bull run. And especially in Bursa, I remember that it's just like a crazy market. And a lot of the stocks just going up double, triple, and within a very short period of time. So 2017 is a very bullish market. And until we hit 2018, so that's where the U.S. Trade war happened. So the trade war between U.S. and also China, at least that's what the headline told us, that triggered the sell-off. So on hindsight, when we look at the chart here, so this is the S&P 500, it doesn't really seem like very threatening, especially for the dip here. So this is a sort of a very strong uptrend. And then look at the last run up. So definitely this is a climatic run buying climax, followed by automatic reaction, a technical reaction, and eventually just define this trading range. But at that time, I think the Dow just dropped like 2,000 points just within a few days, and it's quite scary. I still remember vividly because that's very close to the Chinese New Year. And a lot of the stocks also get hit badly. But if we look back, it doesn't really seem like very threatening. But anyway, back to the point, we see that during this bull run from 2017 or end of 2016 all the way back to about 2018, this is what happened for the dollar index. So this is somewhere around here, end of the 2016. So we see that the dollar index is weakening, going down from about 102 to 90, while the stock market is going up. So it's inversely proportional. And subsequently, when we experience some kind of the change of character, or somebody call it a very deep pullback or even sell off, look at what the dollar index did. It's just a pretty good uptrend, although it's not very strong, somewhat grinding up action, but it's still within this nice up channel. So the first momentum up is nice, and subsequently just a bouncing up and down, but still within this nice up channel, while the stock market is just consolidating within this reaccumulation range. So subsequently, that is the Christmas sell-off. So I think that's end of the year. There's a shakeout action followed by a very quick recovery up, and eventually just have a few tests and started a sign of strength rally until we see this. So again, you see that this is the COVID sell-off last year, and look at what happened to the dollar index. The dollar index just shoot up. So again, it's also inversely proportional to the market. And after that, we notice that definitely we have a V-shaped rebound. So this is a very quick recovery up for the US stock and also for the Bursa stock as well. So market is going up. Look at the dollar index. It is going down. So for the past few years, at least I would say from 2017 until now, is sort of having the inverse proportional relationship. So right now, the US dollar is sort of bottoming. So firstly, we definitely see hit the previous swing low level as a support, and then having a change of character. So bouncing up, coming back, have a test, and just probably sort of consolidate just below the resistance level. And I think it's sort of just breaking out now. So if we treat this as a accumulation range, could that become a nice uptrend for US dollar index? So if US dollar index is going up, so can we expect some form of the volatility? I don't really want to speculate like last year COVID sell-off, something like this sort of the sharp sell-off. But if we just get this sort of the 2018 correction, then I think that would be significant. So while the if the index just have a pullback of 15% or 20%, a lot of the stocks will get hit very badly. Drop like 30 to 50% is not unusual. So if you're not, if you can't recall what happened in 2018, just go back and take a look at the stocks during that period of time, 2018 to maybe just 1 year, either Bursa or US. That's fine. So far, I think the big trend for US dollar is turning up. So it's just a matter of time that it will just go up. Whether it will be very sharp or will be just a sort of grinding up action, we can't really tell at the moment. But for the general large structure, I think it sort of completed its accumulation range for the US dollar. So we just need to pay attention to that because of the inversely proportional relationship with the market. And apart